Hello, this is Matt on the Moon Lambo channel. Narratives in crypto media are designed to trick you. There are entities and people that want you to buy high and sell low. In fact, I'm going to highlight you some specific information that's coming from Goldman Sachs. I want to highlight the shift in tone coming from anything having to do with Elon Musk about Bitcoin and how the media at large is reporting all of this. And there's a popular chart analyst who's very long XRP who cited a thread on Twitter that really I think just highlights how people they experience things emotionally, right? Like you see things happen, you see prices going down, you feel scared. You see prices going up, you feel euphoric. And this thread that was shared, which there's actually a piece written about it in Cointelegraph I'm going to touch on, it just so clearly to me indicates how the typical retail speculator, the way in which they're responding to market news and gyrations in the market in terms of price action, how the typical retail speculator behaves versus the big money, it is so different, and it results in your typical retail speculator getting wrecked, and the bigger entities out there just making absolute fortunes. And so just arming yourself with knowledge can help you to potentially not run into some of these pitfalls, let's say. So before we go further, though, I do want to be clear. I don't have a financial background of any kind. I'm not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos as a fun hobby about Ripple and crypto and XRP, but that's all that's going on here, damn it. And if you don't like it, well, you can just get out. Now, as I record this, XRP is at 58 cents, Bitcoin's at $32,218. Market cap for the asset class 1.33 trillion, and Bitcoin dominance just a little above 45%. And so over the last 24 hours, happy to report, we've seen some positive price action, actually. In fact, here, if you happen to be looking on the screen, I currently have the top 10 cryptocurrencies by market cap listed there. And you can see, just in a general sense, where I'm circling here, these are the weekly charts. But look what's been happening at this last indicator. That represents roughly 24 hours, and prices have been climbing right a bit. Which is good. You know, I prefer reporting on that, even though the short-term price action isn't necessarily the best thing to be focused on a day-to-day basis. I'd still much rather report positive price action than negative price action, because I know everybody's curious about it, and yes, I want to be aware of what's happening in the market too. Even if I'm not going to act on short-term price action, I'd rather just stay engaged on a daily basis because I happen to be that fascinated personally here. But take a look at this. There's a thread written by a gentleman named Sam Trabucco, and I don't want to run through the whole thread. It's pretty long. I did read it, and it was fascinating. But this thread was retweeted by chart analyst Credible Crypto, who simply wrote the following: "Don't take it from me, take it from Alameda. Bitcoin at a 50% discount from all-time high is a raging buy." Incredible Crypto went on to state that at these price levels, Bitcoin hovering around the range of $30,000, it's a great long-term buy. That's Credible Crypto's opinion, and he does believe that we will see Bitcoin above $100,000 this market cycle. He does believe that XRP is going to end up this market cycle, in all likelihood, somewhere between $20 to $30. And so then there was this article from Cointelegraph written exactly about that thread. And it's titled, "Trading Firm of Richest Crypto Billionaire Reveals He's Buying a Lot More Bitcoin Below $30,000. And so I want to cover this and keep this in your mind. And then right after this, I'm going to cover some stories having to do with how the state of the crypto market is being reported by the big financial institutions and media at large. So just kind of compare the two, see how you're feeling, how you've been feeling perhaps, and see the actual actions of the big money. What are they actually doing here? And so Alameda Research, headed by Sam Bankman-Fried, whose net worth lately has reached over $8 billion, has upped its Bitcoin buying around its key psychological support of $30,000. Now, look, to me, this isn't the least bit surprising. I've been reporting for some time that as we've been experiencing consolidation in crypto markets for some time, what does on-chain data tell us about Bitcoin? It tells us that short-term wallets have been selling, so your typical retail speculator, and then the people have been around a lot longer. You can think institutional money also. they've been purchasing the fear from these smaller retail speculators. That is to say, all the people that are newer to crypto panic selling, they are selling into the hands of whales. Yes, aquatic creatures actually have hands. Can you believe it? How about that? And they have opposable thumbs too. It's crazy stuff. If you don't believe that, just Google it. I'm telling you the truth. Whales definitely have thumbs. And so that's what whales have been doing, though. They've actually been snatching all this up. So to see another story like this, it shouldn't be surprising in the least. And so here you go. Bitcoin's painful plunge below $30,000 on Tuesday turned into a so-called buy-the-dip opportunity for Alameda Research, a Hong Kong-based quantitative trading firm and liquidity solutions firm headed by FTX CEO and founder Sam Bankman-Fried. Quantitative trader Sam Trabucco revealed late Tuesday that the company purchased Bitcoin during its latest price decline, adding that the company's cautious strategy to go long BTC USD surfaced out of at least 3 recovery catalysts, which would be a potential to the end of ongoing crypto FUD. Well, how about that? Fear, uncertainty, doubt. Have we not seen a ton of fear and uncertainty and doubt in media? And it impacts people. And then there's the China ban, Grayscale, Epic Unlock, etc. I've talked about all that on this channel. And the stock market's intraday recovery and weaker long liquidations in the derivatives market. So you just got to sit here and ask, you know, because look, Alameda Research, they don't know that I would be willing to bet they're not even trying to do this. They don't know that they've bought the exact bottom, and they're probably not aiming to. This is not what I see from people that know how the hell markets work. They're just like, the potential downside risk is not so bad compared when you compare that with the opportunity to the upside, which looks tremendous. So even if, like, think, what are the most bearish expectations you see for Bitcoin now? And I don't think this is going to happen, but it could. What if Bitcoin went to $20,000 and we're sitting around $32,000 right now? Okay, that's not fun. It's over a 33% drawdown from where we're at right now. Okay, that sucks if that actually happens. But what about the upside? You know, what if analysts like Credible Crypto are correct and Bitcoin does go to over $100,000? And what about all of your other cryptos that haven't even begun to go parabolic yet? You know, there's so much opportunity to be had here. And so, yes, there's always risk investing in any market. Certainly that's true. And we don't know for sure what's going to happen here. But these are part of the considerations that any firm or person is going to have to make when considering this. And if you're doing it in a thoughtful way, you know, you're not going to let emotion make decisions for you. And I'll tell you what, these firms like this in Alameda Research, they are not making decisions based on what you are doing, Mr. Retail Panic Seller. They are not using emotion to determine whether or not they're going to buy or sell. They're looking at all sorts of factors, no doubt including on-chain metrics. Why would you not consider that? Look what's happening right now. And so this is accumulation phase for people that are a bit more informed than a typical retail speculator here. Here's a tweet from chart analyst El Capo, who wrote, Bitcoin, nice bounce and reclaim of the $30,000 key level. Despite the bounce, fundings remain negative/neutral, and I expect them to stay like that for a while. People who sold at these levels to buy at $20,000 will buy back above $40,000. And so we'll see. And again, there's no guarantee that we won't see $20,000 Bitcoin before the next leg up, but I am highly skeptical of that idea. Just based on the opinions that I keep seeing from chart analysts that I respect, there aren't a whole lot of people that do think we're going to be seeing Bitcoin before the entire market collapse. Because look, to be clear, I do think we're going to see a final leg up, and then we're going to see the market collapse probably 80-90+% like we've seen, well, like we saw, after the 2013 and 2017 bull runs. Of course, bubbles do occur. They inflate and then they pop, and then markets recover inevitably. Unless you think that crypto has no actual value and it goes to zero, which I do not believe, well, even after that, it's still going to come back here. But yeah, there's so many people that are just trying to time the market, and that's why, for me, that's the biggest no-no for myself. I have no interest in timing the market. Because that's what people think they're doing. They like to feel like they're doing something. Look at me, I'm so sophisticated. I'm going to be smarter than everybody else. Yeah, except for even if you get a string of buys and sells right in a row, like a ton of them, and you build up your confidence, you get one of them wrong, and if it's actually important, you can just wreck everything you've been doing for years. Not to mention the tax implications if you're a short-term holder of crypto, at least in the United States. I know it varies by where you live, but in the United States, if you hold crypto for at least a year, you can get taxed at a max of 20%, which is the long-term capital gains tax rate. So there's so many reasons I just don't want to do it. It's like there's so much data that just shows people that are traders that think that they're smarter than you. Oh, no. I'm going to buy back in at 20. I'm selling my Bitcoin here. Okay, we'll see you at 40,000. All right. Good luck, guy. And then there was this from chart analyst and crypto influencer, if you will, Lark Davis. And he wrote the following. This is about Goldman Sachs. And my gosh, boy do they like to talk out of both sides of their mouth. Whatever suits them in the moment, that's what they're going to do. Do you remember in May of last year when they said that the crypto wasn't even an asset class? And then about a year later, I think it was a little less than a year later, they completely changed their tune after they found a way to monetize it, which is what I said would happen. I was like, look, they don't believe what they're saying, but if they're not selling Bitcoin and they want your money for other investments, why would they say anything positive about it? And so, wouldn't you know, May of this year comes around and we start seeing positive news, but even then, it looks like they're still manipulating the market. Goldman Sachs, everybody. And so here's what Lark Davis had to say on this topic. Last week, yes, just last frickin' week, Goldman Sachs said that crypto is not a viable investment. Again, let me pause right there before I finish this tweet, because again, last year they said it's not an asset class. Then in May of this year, they found out how to make money on it and they were all for it. Then a week ago, just a freaking week ago, they said crypto is not a viable investment. And then so Lark continues his tweet now. This week, the ultra-rich are turning to crypto, and 45% of family offices are keen to get in. The manipulators are getting ready to flip the bull switch. And yes, indeed, manipulators they are. These are not honest people. You cannot trust them. So here's the headline from the street. Goldman Sachs survey. Nearly half of family office clients are interested in crypto. And so as I go through this, just think that a week ago, they said that crypto is not viable as an investment, as I cover everything, because they talk about timelines that must include conversations with people that occurred more than just a week ago. Check this out. It's unbelievable. Bloomberg has reported that a recent Goldman Sachs survey found that nearly half of its family office clients are interested in cryptocurrency. The survey, which polled more than 150 family offices that the bank does business with, found that 15% of respondents are already invested in crypto. It also found that another 45% are interested in crypto assets as a hedge against higher inflation, prolonged low rates, and other macroeconomic developments following a year of unprecedented global monetary and fiscal stimulus. Yeah, and so it's always fascinating to me, because even just half a decade ago, if you're a financial planner and you're even just floating the idea among your clients of, hey, maybe investing crypto, you would actually, more likely than not, lose credibility. But we're at a point now where things are about at a flipping point, if they're not already there, where it's like, wait, you're saying no crypto exposure whatsoever? Then you start to lose credibility because you're not getting it. At this point, crypto is not going away. There's clearly something to it. And even if you're just talking about a really small percentage of overall net worth, my gosh, it gets to the point where if like you're saying 0% is the number for crypto, you're going to look like a damn fool. And so a lot of people already do view it that way, including myself. If you're saying 0% and you're not convinced that crypto is going to be here, you haven't done sufficient research, or you're biased in such a way that I'd have to question, like, and wonder, what are your actual motives? Are you pulling a Goldman Sachs, like you're not making money off of crypto yet? I mean, now they are, but as of May of last year, are you just saying stuff like that until you find out how to get in yourself? Like, is that the type of stuff that's going on? I gotta wonder, because it's clear that there's true value here, and if something's valuable, if there are valuable assets, then people will always buy and sell them in open markets. And so, of course, that's going to persist. Of course, that's not going away. Even if because look, mind you, I hold a couple dozen different cryptocurrencies. Even if I'm betting on all the wrong horses, which is to say, ultimately, let time pass by a number of, whether it's 5, 10, 20 years, whatever it takes, and let's say all the crypto that I hold right now will inevitably be worth 0, there will still be a cryptocurrency asset class. Because I do think most cryptocurrencies will go to 0, but that doesn't mean there's nothing to this. Of course there's something to this, and people are getting this now. And so this article continues. Family offices, which can be secretive in their investments, may slowly be turning to cryptocurrencies like Bitcoin to counter the threat of inflation. 22% of the family offices that participated had $5 billion under management or more, and 45% had assets under management between $1 billion and $4.9 billion. Now, Melina Flynn, a partner and global co-head of private wealth at Goldman Sachs, told Bloomberg that the bulk of family office clients have asked about blockchain and crypto-related technology. So let me think about that. Let me just pause. So Melina Flynn, again, what's her title? Partnering global co-head of private wealth at Goldman Sachs. So she's been talking to these family offices, right? And just a week ago, Goldman Sachs said crypto is not a viable asset class. That's the message that they were putting out there. They wanted you to feel the fear right now. And so when all these conversations were taking place, did something flip and they all happened within the last day or two and now we're reporting on it already? Or were all these conversations and the work being done to put this survey together, was all this being done in the weeks and months leading up to this? Is that perhaps more likely? And it never was the case that crypto is not a viable asset class. It's the messaging they're putting out, and there are always motives for all this, and it's ridiculous. And so check out how they wrap up this story. They write, the majority of families want to talk to us, quote, about blockchain and digital ledger technology, end quote, said Flynn. There are many who think that, quote, this technology is going to be as impactful as the internet has been from an efficiency and productivity perspective, end quote. Yeah, no kidding. And I'm telling you, Goldman Sachs knows it, but they want you to sell, to just be fearful and then sell your holdings. That they would love nothing more than that. All these people that want to accumulate. And how did the media also treat the public comments from Elon Musk and directionally where Tesla was going in terms of no longer allowing customers to purchase their vehicles with Bitcoin? You know what that did to the market when this story came out? It was just nonsense. It was completely ridiculous here. And so take a look at this headline now. Because, look, none of this is ever the end of the world. Elon Musk says Tesla will most likely resume accepting Bitcoin. Well, color me surprised here. What do you think? Of course this was ultimately going to happen. My gosh. Tesla CEO Elon Musk said that Tesla would most likely resume accepting Bitcoin payments, but it needs to do some more due diligence to make sure that its green energy use is above the 50% threshold during the B Word conference. And here's a quote. Most likely Tesla would resume accepting Bitcoin. So there you go. Whatever they can do, they want to publicly save face so that they don't look like there's some sort of mean, just environment destroying entity, especially given the nature of the cars that they're selling and the emphasis that they put on renewable, this and that, blah, blah, blah. I understand, not a good look using the least efficient cryptocurrency and least technologically advanced on the entire planet. Got it. But still, they're arbitrarily, where's this 50% threshold? Like, energy use above the 50% threshold, like, you're arbitrarily choosing something that doesn't mean anything. And so is this tricking people? Like, I functionally don't care. It's all about what was, from a corporate perspective, what was going to make Tesla look best, at least what they believed would make them look best, especially given the nature of their business. Totally understand that. And it also wasn't ever going to functionally change the long-term adoption of Bitcoin. Either it's going to happen or it's not, but this sure as hell wasn't going to be an important driver over the long haul. But still, this is something that it's one of the many factors that led to additional fear and people panic sold. And that's how it was reported. But here we are, just a couple months later, and wouldn't you know, looks like everything's going to be A-okay after you panic sold your Bitcoin and perhaps other crypto. And now, and then whales bought it, and now here we are. But we're cool with it still. And then there was this headline. Elon Musk says he personally owns Bitcoin, Ethereum, and Dogecoin, confirms SpaceX's Bitcoin holdings. Now, how about that? Tesla CEO Elon Musk has revealed that he personally owns Bitcoin, Ethereum, and Dogecoin at the B Word conference that also features ARK Invest Cathie Wood and Twitter CEO Jack Dorsey. And here's a quote. I do own Bitcoin, and Tesla owns it, and SpaceX owns it. And I own a little bit of Ethereum and, of course, Doge. And we know that Doge is his little pet fun project. But anyway, he's also confirmed that SpaceX holds Bitcoin after Skybridge Capital founder Anthony Scaramucci broke the news back in March. Musk, once again, voiced his concerns over Bitcoin's lack of usability and its energy-intensive proof-of-work algorithm, but that he said it has a lot of potential. And so he'll say good things, he'll say bad things, the market does what it does, but it functionally doesn't matter. And how is everything presented and reported to you? Frequently like it's the end of the world. When prices are down, you get the scary stories. Now, once you get to the point where consolidation is happening, though, you'll start to see a little bit of a teeter-tottering back and forth, and then an inevitable flip. And then as things go bullish, you're going to see nothing but positive stories, and I'm going to be pointing that out. And so you following the state of crypto right now, kudos to you for paying attention, while a bunch of other retail speculators have exited after selling at a loss here. Congrats to you, at least, for paying attention here. And so I will be highlighting as the narrative flips and the positive stories come in, and you're going to have the feel goods and all this, and people, again, will be purchasing at all-time highs because they don't know what the hell they're doing. That's absolutely what I'm expecting here. And so, again, all of this is designed to trick you, right? Not that everybody is literally trying to trick you, but there are, in the case of like Goldman Sachs and others, I very firmly believe that's the case, and whales love that, of course. Some of it with some of the media outlets you might think, and I think there's probably some truth to this too, just to be fair, like to some degree, they're just kind of hopping on the bandwagon because there's a lot of copying of stories in crypto media if you haven't noticed this from one platform to the next. To be honest with you, sometimes outright plagiarism, because I check so many different news sources in crypto, and I know the ones that that are a little, sometimes have I'll leave them nameless at this point, but I absolutely see this, and a lot, frankly, to be fair, also like a lot of the sites that do that, they are like these fly-by-night websites that even in crypto media most people haven't heard of, but they're out there. They're doing that too. But this is the world we live in. Just be aware of it. Do whatever you want to do. It's not like I'm telling you to buy or sell or hold. You do you. You do whatever you want. But just between us girls here, I don't think it makes no damn sense to be relying on the media to make important financial decisions. It makes just as little sense to use emotion to make such important decisions. But I'll wrap up here. I am not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.